Rodney. Thanks for doing this quick chat with me. I know we have heard good news from Bank of Canada today in regards of the rate reduction. A lot of people were debating between 25 versus 50 basis point, and I'm quite sure 50 basis point is very welcomed. I know that you are a mortgage broker, and please correct me with Kingdom Mortgages. And I want to have your perspective in the sense of what it could have been if it was 25 basis point reduction and what it is with the 50 basis point reduction, as well as your predictions for December. I know it's a bit too early, but just trying to get a little bit of, an insight from your point of view.
Thank you, Gloria, for having me over on this call. So basically, the zero point 0.5 reduction was predicted. The economy has stabilized. Inflation has dropped to 1.6%. What people have to remember is there's no correlation, or there's a very slight correlation between the interest rate drop, which happened this morning of 0.5% to versus variable versus fixed. Fixed rates are determined by bond rates in the market. Variable rate is determined by the Bank of Canada on a totally different level. Traditionally, variable rate have been cheaper than fixed, but you know, in the last 18 months, it's been more expensive, which was really took everyone aback. Our predictions are that in December I don't think there will be another reduction of 0.25, but early next year they will start dropping rates even further.
Okay.
This is going to drive the housing market back up again because now people are jumping into the market and the market has started to warm up. By next year, March, April, it's going to be again a bidding war market. That's the prediction I'm making. Because there is a shortage of housing. It's going to take the Canadian government, if they keep pace with growth at the level we are growing in Canada, 10 years to meet the market demand that we have right now. So it's going to be a very healthy market. The 0.5 difference in the rate drop right now, if you're on a variable rate, is impacting households by $300-400 a month on their monthly payment, which is a substantial amount.
Yeah.
That's a good amount. However, what that does is, because of the stress test, that will lower the benchmark on the stress test now, and that will help people to qualify for an additional mortgage loan amount. And come December 15th, which hasn't been done in a long time, all first-time home buyers will qualify for a 30-year amortization, which will increase their loan amount, and it will put them in a much better purchasing position. So this rate decline that happened today could not have come at a better time because of December 15th, which is a month and a half from now. You're going to see a lot of buyers back in the market, and they qualify now with a 5% or 10% down for a 30-year amortization. That's going to increase their purchasing power by, depending on their incomes, by between $50,000 to $100,000, which is a big, big difference. So it's going to help the market.
Okay. And is it true? Because there's a kind of a mix. I don't want to say a myth, but I think a mix understanding where people could still purchase a property now as long as they close after December 15th. They may be able to take on that 30 years amortization, or is it that only if you purchase after December 15th?
It's only after December 15th.
Okay,
so
and
you
it's not
cannot
just the
buy.
closing after December 15th,
No.
but it's the original offer document after December 15th or thereafter.
Correct. And one more good news. If you bought a house 5 years ago, 3 years ago with 5% down, the threshold for your approval was $1 million.
Right.
Effective January, it's going up to 1.5 million. I'm sorry, effective December 15th. It's going up to 1.5 million. That means you can now Usually, if you had a fixed rate at say 1.50, which was glory days, you know, 1.5 year ago, almost 2 years ago, and you have 3 years left on your term, but you want to upgrade your house, you don't have to break your mortgage. You can take your existing mortgage. The limit was $1 million then. Now you can go up to 1.5 million. So that means you can upgrade your house with that 5% down, pay the difference in your insurance fees, and
Mm-hmm.
still maintain your original rate and upgrade your house to, because, as you know, Gloria, house prices have dropped, especially the larger units.
Yes.
Great time to buy, great time to get into the market.
Yes. So, uh, going back to today's rate reduction, if and you were saying that it's going to have at least a $300 to $500 savings on each individual's household income, and you are not predicting a rate reduction in December, but likely in the new year. In terms of buyers who have been sitting on the fence and waiting for interest rates to go lower, what would your advice be, coming from a mortgage personnel?
Interest rates, if interest rates are high, house prices drop. It's the reverse right now. Now we're going to be trending towards a lowering of interest rates. You should get into the market sooner than later, because come next year, early next year, because we're expecting at least 1.25 basis points drop next year in the rates, right? You will find that the affordability is going to be restricted again. So
Mm,
we have a lot of people waiting on the fence to buy a house, thinking when rates drop, they'll be able to afford a large, a property. It's going to be the opposite. When rates fall, your affordability is going to be restricted because house prices are going to go back up.
yeah, I agree because I've said this many times to buyers who just opt to sit on the fence, and I wanted to get your perspective, and I do appreciate you sharing that as well. And again, I really do appreciate you hopping on. I know this was not planned. I really appreciate you taking the time doing this with me, and we should be doing more sessions of such in the near future as well.
Definitely. Pleasure to be on your call.
Thank you, Rodney. We'll
Thank you.
talk soon. Okay, bye
Okay.
bye for now.
Take care. Bye bye.